All right, folks, welcome back. Today, we're diving deep into the behemoth that is NVIDIA, or NVDA. This stock has the market buzzing with speculation. We're going to cut through the noise and figure out if NVDA is a buy now or if there's more to unpack. Now, let's set the stage. The market narrative around AI, and specifically NVIDIA, is a roller coaster. On one hand, you have NVIDIA posting record data center revenue and projecting a mind-boggling $3 to $4 trillion AI infrastructure market by the decade's end. But then, you have a chorus of whispers about a potential AI bubble brewing. We're talking concerns about circular financing, like the recent news of big players investing in each other, which then fuels chip purchases. And some folks are even drawing uncomfortable parallels to the 1929 market exuberance. We're seeing the Warren Buffett indicator, which measures total market cap to GDP, at an all-time high, over 217%. Plus, there's this looming projection of a significant 40% funding gap for AI buildouts by 2030 compared to expected revenues. It's a heady mix of FOMO meeting debt, and it's got a lot of smart money asking, is this sustainable? First, let's get a handle on NVIDIA Corporation itself. This company is a powerhouse, providing graphics, compute, and networking solutions globally. From GeForce GPUs for gaming to Quadro/NVIDIA RTX for enterprise to their massive data center platforms driving AI, HPC, and autonomous vehicles, NVIDIA touches nearly every corner of advanced computing. Their management is bullish, seeing unprecedented demand for their Blackwell and GB series platforms, confidently guiding towards that multi-trillion-dollar AI infrastructure market. They are at the absolute cutting edge of this revolution. So, how do we reconcile NVIDIA's undeniable dominance and bullish guidance with all this AI bubble chatter? Our analysis balances these two powerful forces. We believe NVIDIA's technological leadership will drive growth, but the broader market structural and valuation risks can't be ignored, even if management isn't explicitly addressing them. Let's break down our scenarios. Our base case, which I'm giving a 50% probability, assumes NVIDIA continues its dominant trajectory. They leverage their leadership, and management's long-term AI infrastructure spend guidance largely materializes, fueling high growth in the data center segment. However, we're building in some moderation due to those underlying valuation and circular financing concerns, preventing sustained extreme multiples. For this base case, starting with NVIDIA's current TTM EPS of $3.51 and assuming a one-year forward EPS growth of 35.55%, we project a forward EPS of $4.76. Applying a forward PE multiple of 50x, which is slightly below current but still premium, we arrive at a fair value of $238. I'm giving this a solid 50% because the technicals tell us we're in an uptrend, which provides strong current momentum. But folks, those big-picture market concerns about valuations and the AI bubble mean we can't ignore a potential cooling off. It's a careful balance. Moving to our bull case, I'm assigning this a 30% probability. This scenario posits that NVIDIA's innovation and market execution continue to absolutely crush expectations, effectively dismissing AI bubble concerns as premature. The circular financing is seen as an effective accelerator for ecosystem development, leading to even faster adoption and revenue growth. The $3 to $4 trillion market materializes at the higher end, with NVIDIA seizing an even larger share and maintaining robust pricing power. For this, we take the current TTM EPS of $3.51 and assume an aggressive 45% one-year forward EPS growth, hitting $5.09. Applying a slightly expanded forward PE of 55x, reflecting sustained hypergrowth, we get a bull case fair value of $279.95. For the bull case at 30%, this hinges on the market shrugging off those bubble worries. The technical analysis does point to an uptrend with a next upside target of $200, suggesting there's still gas in the tank for upward movement. If that momentum really gets going and exceeds expectations, we could hit these higher fair values. And then there's the bear case, which I'm putting at a 20% probability. This is where the AI bubble narrative turns into reality. Concerns about circular financing, extreme overvaluation, and that 40% AI funding gap by 2030 become significant headwinds. We could see a broader market downturn, possibly exacerbated by FOMO-fueled debt, triggering a severe correction. Increased competition and/or regulatory scrutiny could also erode NVIDIA's margins and market share. In this scenario, we see NVIDIA's TTM EPS of $3.51 growing by a mere 10% to $3.86, and a significant PE multiple contraction to 35x, still premium but a major correction. This yields a bear case fair value of $135.10. Now, the bear case at 20% is where we need to be cautious. The technical analysis is stark here. If these supports at 178 and 165 break, the next price support is 130. That 130 level is chillingly close to our bear case fair value, meaning if that AI bubble narrative really gains traction and those technical supports crumble, the downside is very real. This probability is directly influenced by that critical technical warning. All right, let's pull up the chart. Here's what I'm seeing for NVDA. The stock is currently in a solid uptrend, with the next upside target looking like $200. Now, for the downside, we've got some key support levels to watch. The first one is at $178, and a secondary, stronger support is at $165. This is critical because if these supports break, the technicals indicate that the next price support we'd be looking at is all the way down at $130. Keep those levels in mind, folks. So, is NVIDIA a buy? Well, based on our weighted average across these scenarios, which comes out to roughly $230, it looks like NVIDIA still has upside potential from current levels. The technical uptrend confirms that positive momentum. However, this isn't a clear the runway, all systems go situation. The significant probability of the bear case, directly supported by critical technical support levels, means we need to remain acutely aware of the AI bubble risks. The bottom might not be in for a long, drawn-out correction if those supports fail, but the current momentum suggests NVIDIA is far from being at the bottom right now. Given our scenario analysis, $238 appears to be a fair value in our base case. For those looking for more conservative entry points, watching for a pullback towards the technical support levels of 178 or 165 could present a compelling opportunity, especially if you believe our bear case fair value of around $135.10 presents an ultimate safety net. I'm looking at those technical support levels as potential buy-the-dip opportunities, with conviction increasing if we approach the lower end of that range. All right, folks, that's our deep dive into NVIDIA. If you found this analysis helpful, smash that like button, subscribe to the channel so you don't miss our next episode, and let me know in the comments below. Do you think the bottom is in for NVDA? What are your price targets? I read every single comment. Now remember, I'm just Dave, and this is for entertainment and informational purposes only. I'm not a financial advisor, and this isn't financial advice. Always do your own due diligence, consult with a professional, and understand that all investments carry risk. You could lose money. Seriously, don't invest based solely on what I say. This is for your education and enjoyment only.